the full revival of demand, especially for discretionary items, will happen only when the uncertainty is fully resolved. That said, we are actually in India getting into the festive season, and the recent survey that the Reserve Bank of India, consumer sentiment survey that the Reserve Bank of India has released, shows that the expectations of demand actually for next year, for instance, is significantly better. So we do hope to actually revive demand in the festive season, and once the vaccine is there, full revival of demand and growth.
How bad do you think the contraction would be? The RBI has been very quiet in terms of its estimate for the year, whereas we've heard from the likes of the World Bank at a contraction of more than 3%, the IMF more than 4.5%. What's your own projection of how bad that contraction would be for the year?
Haslinda, I actually am a little uncertain about the exact number, because this is an episode that, like none other, there is likely to be a contraction, no doubt, because of the lockdown that happened in the in the first quarter of this year. There's been significant shrinkage in output, and which will have impact. You and the analysts would have noticed that once the lockdown was lifted, in a phased manner, in the month of July, economic activity picked up really well to get to about 85 to 90% of pre-COVID levels. So that is the good part. But because of the decline in output in the first quarter of this financial year, there will definitely be that impact will last, and there will be some shrinkage. I think the exact numbers we'll have to wait and watch.
Dr. Subramanian, David here. Because of the crisis, financial markets have been extremely forgiving of countries borrowing a lot more than they should or they used to, and spending more as well. Worst case scenario, talk to us about how much India can actually and should borrow from the markets, and can you give us a sort of worst case scenario target for the fiscal deficit?
David, I think before I respond to that question, I do want to actually point out very critically that, for a country like India with, where potential growth is still very high compared to some of the other advanced economies, it is really critical to understand the direction of causality between growth and debt sustainability very well. Most of us think that actually debt sustainability is really critical for growth. It is, but what is more important is that it is growth that actually leads to debt sustainability. And on that, the evidence for India is very, very clear, because we are a high-growing country, country with a very high growth potential. And so, when growth happens, the GDP, which is the denominator, and the debt to GDP ratio rises, and that's what helps debt sustainability. So this is something that is very critical, and I keep emphasizing that we have to get the direction of causality correctly, that it is growth that leads to debt sustainability. And especially in a period like this, in extraordinary times like this, we have to make sure that we actually keep focusing on growth and reducing the impact on growth. So we will do whatever it takes to ensure that growth is back, which will eventually bring in long-term debt sustainability as well. And one more point, I think, which I must mention, if you look at in terms of can I just finish
Dr.
this
Subramanian,
point?
in 30
if you
seconds.
look at overall debt to GDP ratios of
Dr. Subramanian,
yes,
in about 30 seconds, tell us about the privatization plan. What's been the progress?
Haslinda, can I just finish that point and come back to your question? What I was saying was, overall, among OECD economies, the debt to GDP ratio of India overall is much lower. So that is something that investors must definitely keep in mind, by far among the lowest.